3, 2, 1. Welcome to the Forex Trading Show. Forex trading live every weekday morning. Real trades, real profits, zero analysis. Set back, relax, and get ready to profit. And now, your host, Terry from FXWithTerry.com.
Welcome, fellow Forex traders. Getting into Tuesday here, August 13th, for the system results, the Forex market. Pretty slow. Has been all summer, but it's kind of like a roller coaster where it's like click, click, click to the top, and then all of a sudden there's this incredible rush as you fall. And falling in that particular case can indicate or be a reference to prices going a lot farther than you thought, or a lot lower than you thought, up or down. Right now we're in a free signal trade GBP USD, just kind of going sideways. It's going to be a great trade. Doug says good morning. No, Doug says morning. Not good morning, but morning. Yes, I agree. It is very much morning. In fact, I way overslept today because I've been putting in probably a 10-hour day, maybe a little bit more every day, digging dirt to finish my pool in the backyard. I think I'm going to die. So GBP USD, sell trade, very good. Nothing has closed overnight. Let me get this in the proper position here. Nothing closed overnight. I'll look at the history here. For the week, $368.88 closed overnight. And remember, these lot sizes are a reference. You can bid more or less. Same trade, bid more makes more, bid less makes less. Pretty straightforward. Not much more to say there. We will move on and look at some of the other accounts here. Next one we're going to look at is my subset of my main system, the 10 pip hybrid. Let me pull it up here. Here it is. Let's see what's going on. We're in a couple trades. Trading a particular group. I don't remember which one. Doesn't matter. I can go look it up. Essentially, we trade groups of trades. And actually looking pretty good in terms of the volume for this. So it's closed $257.16 overnight. That's if you were bidding what I'm showing on the screen. It's a 1.0 base lot size in this sample account. When I send the trade out to you, it comes out at 10 cents, 0.01 lot. So you can scale that up to any level that you want. So 257.16 for the week. Stand by, my cords are all jacked up here. And let's see. I said for the, no, I said that wrong. 257.16 for the day. For the week, $7,679.16. And again, it's scalable up or down based off of what you chose to bid on your account. Same trades, your account. The next account we are going to look at, we're going to look at a combo account. And I've been using this as proof of concept, also as trade management. What I might do is, you know what, I might skip over that one. We'll touch it last because I want to talk about some trade management. So let's move on to the next one, which is the overall system called my Premium Signals Monitor. You could trade all 22 currency pairs. Typically, people don't have a big enough account. Or what they do is they put it on a small account and bid too much. And it just trades a lot at most of the time. Right now, this summer, it's been really low volume. Then all of a sudden, we had the Japanese yen interest rate got increased from 0% to, I think, 0.25 2 weeks ago. And it just wrecked the market. All kinds of bearish volume. So let me move on here to look at the overall system. Let me pull up the account. Here it is. I'll just kind of give you a little bit of sentiment. So what do we got? About 24 trades. And here is closures overnight. This is just from the raw system. $175.82 closed. Couple dozen trades. Not one loss last night. So some odd volume, some positive volume. Nothing's trying to push and wreck an account for one random currency pair. So it seems pretty normal. And this is the problem that I think we have, with your average person that trades the system. They'll come, let's say someone signed up yesterday and they look at this and go, every trade wins? I'm going to jack my bid up 100x. And then you get some random AUDJPY that runs your account 45 trades deep, and you lose. Obviously, I said in the title of the live video today, we're going to talk about some trade management. We're really going to talk about, how to practice and what you should be trying to accomplish. There is that account. Let me look at the account list one more time. Let's go look at the new algorithm real quick that I've had running. And I have not looked at it. Remember, we were trading the brand new algorithm. It's zero entry strategy. It's simply trade management algorithm. And the account 345. Let me pull it up here. I'll tell you what it is. Apparently, it's hard for me to talk about the account and look for the account number at the same time. Here it is. Share this with you. This is strictly a trade management algorithm. It is trading one currency pair, and it is playing it basically for and against itself. Once you get this many trades deep, I told it at 4 trades deep, start closing profitable trades and taking equal losses to break even to keep it from running away. We've seen this thing as low as 800%, 850% margin level. As far as the history goes, closed a couple nice trades last night, $104.40. So this is promising, but the issue comes in once we start talking about trade management in a few minutes here. This is not necessarily an algorithm you could provide human manual trade management on. You gotta let it do its thing. You might be able to, but at the moment you start hedging, which is what it does itself, and or partially closing other pairs, other negative trades, I should say drawdown trades, that's what it's intended to do. So as soon as you step in and start manually doing that, you're probably in trouble. So this is the type of algorithm. You turn it on, you let it go, you get what it gives you. It's been looking pretty good. So for the week, it's closed $703.27, and for the month, and I don't think it's been a full month, $1,541. It was a $10,000 account to start with. And it's still not quite a month yet. So it's up, if you look at it, it's up 15%. And that's at bidding a base lot size of $0.101. If you took this and put it down at a base lot size of 0.01, it's scale. You could scale it up from there. Scale the lot size up from there. So that's looking pretty good. But like I said, it's kind of like you get what it gives you. So let's go on and go back. We're going to talk about trade management here. Let me pull up a certain account, and I'll explain to you what we are looking at. 1.8. Here it is. Yeah, so let's take a look at this. And again, this is a sample account capturing 2 different trading feeds that I have. One being what's called the one profitable pair feed. It is what it is. It grabs one pair, trades it into profit. I've also added onto it what is called my gold scalper account. And I have shut off the one profitable pair feed. And we're looking at gold scalper trades here. And this is, I'm overbidding to show how to manage Because oddly, in my several years of running this algorithm out to the public, what the public likes to do is overbid the shit out of all of these. There's no ability to be conservative for some odd reason. I don't know, it's human psychology or something there. So people, I haven't really paid attention, and I don't put any rules on it, right? People attaching gold, a metal that runs. What is it? And I'm being kind of paraphrasing here, but your average pair is like 1 to 100 movement, and gold is like 1 to 10,000 movement, whereas like US 30 is 1 to 100,000 movement. Like, you don't fuck with these pairs on tiny little accounts. They will run you. Someone said, there's been some sentiment that says, well, how can this be a scalper? It is a scalper. The movement moved against it, and it's doing its best mathematically to bring it back, right? Typically, you see this thing goes, and for the last few weeks, maybe even for the last few months I've been running this, goes into a trade, makes its $10 for the night, moves on. And you're like, $10? Yeah, it's scalable. 10 can be scaled mathematically to twice to 20, 4 times to 40, 5 times to 50, 10 times to 100, right? So it's all scalable. All these things I do are scalable to your particular account. So gold pushed. Let's go look at the chart. Get my trusty pen out here. So we're looking at the day chart here. Gold pushed hard, and let me kind of show you something here. So if we were in a sell trade down here because of the volume and the movement and the entry strategy that this thing has, it actually likes to trade the bounce backs, the pullbacks, right? So it wasn't entering a sell down here thinking that the price was going this way. It didn't do that. It knew the price was going to bounce this way. So it seems like the bounces have a little bit more powerful. It's kind of, you get down to the bottom, you lose your momentum, and that bounce kind of goes. Well, this bounced pretty hard. And so here's my life in relation to this day chart. So sell, no big deal, does another sell, has a huge propulsion candle, does another sell, and right in this area is when everyone starts losing their shit. What's happening? Ding, 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 ding. My messenger going off. Terry, here's my account. Here's my margin level. What should I do? What should I do? What should I do? And I'm looking, going, well, first thing I looked at, I'll show you. And yes, this might be better to look at maybe in a browser. We'll see here. But if I looked over here, here's the most recent top over here. And I'm like, well, very conceptually, we're going to that area. Called a resistance area. Very possible that we're doing that. Doesn't mean it can't push through. In this, but you know, we have a little bit more. You'll notice that even if it's going to push through, it typically doesn't just push right through and keep going. It kind of hovers there. Guess where we're at? Same spot. If I come down in time frame, you'll be able to see. So here's the push. Here's the push over here, where everybody was like, oh, we're going to sell. Oh, we're going to sell. Hey, Terry, help me. Hey, Terry, I'm about to lose all of my account. Right? I start looking at people are you know, have gold on a $1,000 account bidding a 5x. I'm like, yeah, you know, you're high risk. It's all of this is high risk, right? But you're high risk. And it seems to me, and I would not have known this, apparently people that come in and use my system are just pure raw virgin Forex newbies, because they're like, oh wow, a system where I can make money and not lose, and I'm just going to get rich quick. Well, I wish it happened that way. And what's interesting with my system, 95% of the time that's the case. But then the market does what we saw right here. It just pushed a little too far. It increases the lot size mathematically, because guess what it's doing? You can't see it on the screen here, but it's dragging the take profit up with it. right? So the take profit is, somewhere in here, let's say. So we're just waiting for a little bit of a pullback. We're starting to get that. We got this down momentum. The Asian market brought it back, and then New York is starting to push it down a little bit. I don't know if it's going to continue to do that. It might go sideways for a week. We've seen this before. But somewhere down in this area is probably the take profit. We'll see. Maybe lower, but I'm being kind of general with this. So the number one thing for you to learn, and I've showed here's kind of the crazy part. Any trade management that I've taught and shown is always triage. You lost an arm on the battlefield, and I've got to help you go, stop bleeding to death. And I realized that I kind of got sucked into that with everybody else. And what I'm going to do now is I'm going to constantly talk about, and I already have an algorithm built, I'm going to constantly talk about the hedge. Hedge is the number one way to protect your account. And listen, Forex trading is risky. Hedging is risky. The only reason it's risky is because we just don't know what's going to happen. However, there is a general concept of hedging, which is simply this. You create an equal and opposite trade. That's it. You guys are going to get tired of me saying this. An equal and opposite trade. There is no hedge right here. However, you can see at the bottom here, I created a buy stop, which is a pending order, which that was my hedge. I don't know if you can see it on the chart here at the top. You probably can. Let me zoom out just a little bit. Yeah, you can't see it. It's just too small on the screen. But right here was my buy stop, if you can see where I'm drawing this line. So if the price goes through that, it's going to trigger a buy. Because what I'm saying, at this price level, I don't want my account to bleed out any farther. I don't want my drawdown to go anymore. I'm going to lock it in. Okay? I'm going to lock it in. A lot of what I'm looking at, as you know, is margin level percent. Yes, this is low. I'm using this as a practice account. I think yesterday when I did place a hedge and then it pushed through the hedge, got profitable, came back, hit the stop. That's what I want it to do. And now I'm getting ahead of myself a little bit. But the idea is to let the price push through. In fact, I'll show you this, how to do it on mobile. It's somewhat easier to do if you're on desktop. Most people are not. So let's actually look at this. So let's say I'm going to zoom in a little bit here. We'll go to the 1 hour. And I already have it on my screen. What I did was I clicked, probably got to show you this. I clicked this area up here, the symbol area. And what I do is I click this and I grab myself a horizontal line. And I put it on my chart. And I'll show you why. Okay, I'm doing this on mobile. These are my little nuances to do it on mobile. So I will put that line on the chart. You can see I got it here. All I got to do is touch it with my thumb, and I can move that line up and down, put that line wherever I want. Okay? If I wanted to place a buy stop, let's say up here above this wick, right? I would just stop moving my thumb. I would stop the line. And what it allows me to see is what the actual price is at that level. Now, if you can't read it, which sometimes for me it's hard, right now it's 2476.03. Okay. However, let's say you can't see that and you're on your mobile device. I'm going to hold my thumb over this little tiny white dot here, and you're going to see a menu come up. Down here. I'm going to click Properties right here. And when I do that, it will tell me the property of that line. That's my price. Now, what I'm getting ready to do is place a pending order. Okay. Basically, I believe it's called a buy stop or a sell stop. But, practice this. This is where practice comes in. Because you're going to get some other options when you do this. So if I actually just click that number with my thumb, See how it becomes highlighted? And if I double click it, and I've got an iPhone, I can highlight the whole thing, just double clicked it with my thumb, and I can hit copy. Now I got that price. That's where I want to place the pending order. I got the price in my clipboard. I'm going to go ahead and click trade in the upper right hand corner, and I'm going to enter. We're not actually going to do it because this is essentially my live test account. I'm going to click trade. Make sure I've got XAU USD gold up top here because here's where I want to place the pending order, right? So instead of market execution, I'm going to click that, and I want a buy stop, okay? All of the trades I'm in right now are sells. I want to click buy stop, okay? And then I simply need to put in my number. Now, it's obviously not going to let me do that because I'm just randomly doing it on the chart right now. So maybe it'll let me do that, but nonetheless, I'm going to go over to the price area here, and I'm going to paste that price that I got from that line because that's where I want to place my buy stop. It's a pending order for all intents and purposes. So I click in there. I'm going to double click. Is that the one I want? Nope, I didn't. Okay, so I'm gonna back out of that number. Double click. I'm gonna paste what I had. So there you go. So that's the number where my line is. Okay, and it would allow me to do this. I just go ahead and hit place. Okay, and it would place that pending order. That's actually a pending hedge. So if the price moves that far, I really don't need it to go that any much farther than that. So I set that. Now, here is where we're going to go back. So now let's say that was placed on the chart. What I'm looking for is the price, most likely, is going to push up past it, and it's going to go profitable because, the hedge, it's opposite of the direction we're in. When that happens, I'm literally watching it on my phone. When that happens, I need to set a stop loss. Now, that stop loss could be at break even. It could be a little bit of a loss. Typically, in my case, I'll take a little bit of a loss because if the price comes back down and hits that stop, I just wanted to get me out of that. It was simply a protection for the price going farther. Once it comes down past that buy stop or that buy that was launched, I went out. Here's what gets a little crazy about it. If you did it at the top, like most people are going to do, they're like, well, I probably should hedge. You know what? I feel okay. I probably should hedge now. Oh, man, I have to hedge. And then it's right at the top. Okay? So you hedge, comes back against you. That's why I'm suggesting, and although you don't necessarily know this, that's why I'm suggesting that you got to hedge a little bit early for yourself. Not at 10,000% margin level. Probably not at 5,000%, maybe 3,000% margin level. I'm absolutely guessing. This is why you need to practice. You get a demo account, you get a $10,000 demo account, or hell, a $1,000 demo account, whatever it is. You start taking trades and you overbid on them. You just plug into my automated system, you overbid on them. And you watch that margin level percent come down, 10,000, 5,000, 3,000, 2,500, 2,000. And you say, okay, I'm going to pick 2,000 margin level percent as the place that I hedge. What you don't want to happen, which will happen to you, and you got to pay attention to, is you'll end up hedging up here. And then price does this. So you need to get out of that hedge. When it comes back up here, this is kind of the height over here. When it comes back up there again, hedge again. You're just simply protecting your account. There are all kinds of other ways to do this, and I said this yesterday, put together a video that gives you some of the major mathematical representations of how to do a hedge. You could do a hedge and add a little bit to the hedge. That way, if you hedge down here, okay, and you added a little bit to the hedge, somewhere up here, this hedge is probably going to be much more profitable or near break even than the opposite trades you had going. And you just get out at break even. You're like, okay, that one didn't work out. Next 10 or 20 or 30 will work out. And then there'll be one like this. Think about win rate, okay? Even if you had a 99% win rate, there is still 1% chance that the market's going to do this to you. Go against, and you're in trouble, especially if you've overbid. And from everybody that I've seen that is losing some money in this market, you've all overbid. Not everybody, but, you know, hell, I've seen this, people with 20,000 plus accounts doing a 3 to 5x bid. 3 to 5x means we're just multiplying 0.01. So you're getting a 0.03 to 0.05 lot size start. Seems pretty low. But then it jacks up to $5 and $7 per pip, maybe more. Because gold, my friend, a metal, moves 10,000 to 1. Compared to a regular currency pair, which is 1 to 100. US 30 moves 1 to 100,000. 100,000 to 1. And those are general references, but you get the mathematics. You get the contrast there. So, I know I'm talking about this randomly. It's not necessarily intended to be some sort of, you know, stop, go back, pause, take notes. You can, but I am going to make a very dedicated video that will be accessible to members and, you know, be up on YouTube that really focuses on here's a hedge, here's how it's done, here's what you need to do. Because, you know, one of the big management concepts behind the hedge is this. If you hedge up here and it comes back against you, get out. That's the whole, it's just a protection order, right? Typically, if you're hedging at the absolute top of this movement, which is about where I did it, it comes back, you may bounce into the hedge, out of the hedge. Take a hedge, place the hedge, take a loss. Place a hedge, take a loss. Place a hedge, take a loss. That kind of sucks. That's what I'm doing on this account because I'm using it as a management example. What you typically want to do is, because I was hedging late, you typically want to try to hedge a little bit earlier, like I said, 2,000% margin level. Doesn't mean it can't do what I did above. When you go into the hedge, it takes you out. Go into the hedge, it takes you out. Go into the hedge, it takes you out. You're going to take some losses there. The fewer the better. What you're hoping to do is you're hoping to enter a hedge. This is a buy hedge in this case because we were in sell trades. But you're hoping to enter a hedge and it pushes up enough to be in profit, and then you set a break even down here. You set a stop loss above your entry price, even if it's 5 pips, right? That way, when the price comes back, it takes a very small profit, $3, $5, whatever, and you're out. Cool. That's the game. That's the video game. That's the goal. That's the you're winning part. If you're not watching it and you set this, you did your hedge here, the price comes up and then drops below your hedge, you got to get out at a loss. You would have been better off, and this isn't always going to happen, you've been better off to take the hedge the moment it pushes, and you got to give it a little bit of room. You can't be like, well, 10 cents in profit, I'm setting the stop right here. Well, you're going to be in and out, in and out, in and out, in and out, in and out. You've got to play that game. Typically what ends up happening is if you place the hedge here and it pushes a little bit and then it comes back hard, you're taking, you know, $100 losses down here and you get kind of tired of that. So picking a little bit earlier time to hedge can be a little bit better opportunity. It can be. You are not going to close. The intent is not to close the hedge in profit. If you hedge down here and you're way up here at $1,200, $1,500, $2,000 in profit, you're going to be like, man, I got to take that. The moment you do that, you wreck your margin percent level. Because this is a protection order. Certainly if your profits up here on the hedge are more than the opposite trade you're in, get out. Get out at break even. There's even been times when I was up here, the hedge was profitable enough to where it took my original trade and made it like a $150 loss. And I'm like, you know what? That's good enough. Get me the hell out. Get me out. It's just as simple as that. So people, it seems to me, and I've watched them, I personally have no problem taking a loss in an absolute whacked out market trade that is pushed so far against me. I want out. Let me out. People, the mentality, the psychology, and I've been there, it's just inexperience. They watch it go and go and go and go and go and go and go. Then they're like, what should I do? What should I do? What should I do? You listen, you're going to lose your account. And it happens every week. I see even in some of the smoothest, most straightforward markets, people are like, yeah, I lost all my account yesterday. Why? Well, I just kept jacking my bid up, jacking my bid up, jacking my bid up, and then that one trade went 12 deep. And I didn't have the mathematics, I didn't have the lot size, the leverage, the account balance to cover that. And I'm like, well, you should have hedged. You didn't have a plan. I demand that you have a plan. I demand that you implement that plan on a practice account every fucking day, every week, for the next 3 years straight. Have a practice account, hedge the shit out of it. What's interesting about the demo account is you'll have no emotions about it. You'll be like, you know what? I'm going to hedge right here. Oh, that hedge is going negative. I'm going to get out of it. And you'll get a feel. And you're like, yeah, okay, I lost $400, let's say. Make it back next week. What's interesting is you're typically not losing $400 if you take a $400 loss. You're just losing $400 worth of profits. Okay. But what people do is they let it go too far. They blow their entire account. They have to start over. And then they get, and here's the fucked up part about it. And then they're like, well, I'm just going to start at absolute minimum bid. And then it's like this crazy cycle. Wow, I'm only making like $6 a day, but every trade is winning. I'm going to bring my bid up a little bit. I'm going to bring it up a little bit more. I'm going to bring it up a little bit. Oh, shit. And all I get is messages, what should I do now? They show me like the worst, 182% margin percent level. Every trade in $1,000 account is like way overbid. I'm like, have a plan and practice. And I'm giving you a general reference. At 2,000% margin level, it's time to place a hedge. Now, here's where it gets difficult. And I've tried to help you avoid this. If you're trading the exact same currency pair cross, if you're trading USD CAD, USD JPY, USD this, USD that, GBP USD has USD in all the pairs, and USD is running, at that point, hedging 4 or 5 or 6 pairs, it's going to be difficult for you. So you have to start focusing, where should I put some focus? What should I shut down? At that, you're over trading again at that point. But once you get good at the hedge, you'll get good at it at a 70 to 80% level, and your confidence will go through the roof. You're like, oh, 2,000% margin level. Click, click, click. I know what to do. Oh, it's moving back against me. Get out. Oh, it's moving back in the hedge direction. Get in. Get out. Get in. Get out. You play the game. It's just account protection. That's all it is. You're not trying to place that trade and be in some sort of profit. There are some techniques you can do, but typically when you're trying to take the hedge and do what's called zone trading. So if I'm going to sell it at 1.0 lots, I'd place a buy. If I'm going to do zone trading, which is hedging, I place a buy at 1.5 lots. What I'm hoping is that buy will become more profitable than the negative of the lower lot size sell, and I'll get out. If it bounces back, goes to the original trade, I will add 0.10. I'm sorry, I'll add 1.0. I'll double whatever I add. It's like, so lot increases, comes down, lot increases, comes up, lot increases. You'll get burnt. But it is also a very aggressive hedge / profitable technique. And at some point in that zone, you earn enough profits to get out. There are EAs that can do it. If you're really into... One of the reasons I can make more than the average person is I understand simply how to hedge and protect myself. So I can push the limits on my account and hedge out of a bad position when the market pushes against me. Otherwise, I'm making incredible profits. So let me point this out. Mark just said this, or Mark has said this. Mark says, gold scalper has been money. It has. It just does really well. One trade the wrong way is to be expected on any pair. Yeah. Yep, this is one trade. Well, guess what? It wrecked accounts. Why did it wreck accounts? Small accounts. Overbidding. Overzealous. I get it. You get sucked in. Well, this thing's winning every day. What's fun? I'm going to jack my bid up and get rich. Not great. That doesn't keep you in the game. However, you can jack the bid up a little bit if you understand how to hedge, and hedge at a certain point. It's just math. It's just simple math and having a plan. I may be wrong about the 2,000% margin level when you should hedge, because I'm just giving you a reference. It might be 1,200% for you. It might be 1,000% for you. It might be 3,000% for you. Please practice. Go get yourself a demo account and just start practicing. Hook up, get a subscription, get a lifetime license, hook up an automated feed, because that's what, if you're just adding a bunch of manual trades and then trading against yourself, hedging against yourself, probably not going to be as effective. Now, the one other thing that comes into play is this. The decision you have to make when you hedge is, am I going to turn the automated algorithm off, or am I going to let it continue to add trades on top of what I'm doing? That's sometimes a tough decision. It depends on how far you've let it go. Because here's what you can do, although pretty aggressive. If you're in a bunch of sell trades and you need to do a buy trade as a hedge, you go ahead and do that. You place an equal and opposite trade. You total up the lot size on all of the sell orders. You do that exact same total lot size on a buy order you're hedged. If the algorithm, and you're going to let it keep trading, goes into another sell trade, you're probably going to have to place an equal and opposite buy trade to that sell trade. So now you're going to have trades, hedge, trades, hedge, trades, hedge. It's going to be a little bit tough to manage that. It's possible. I've done it before. Or you could say, at this point, just turn the algorithm off. I'm trying to protect my account. That's typically where I'm at with it. I'm not trying to let the algorithm trade, hedge, trade, hedge, trade, hedge. Becomes too much. I turn it off. So, for example, if you're using the copy system we use, Social Trader Tools, you might be able to click the button on your copier account that says monitor trades only. Don't take any more trades. Or you could click the symbol, if we're trading gold in this case, you could just turn gold off. Don't give me any more trades of XAU USD. You're probably better off clicking the, monitor trades only option. That way it doesn't take anymore. The problem with doing that, and here's the tiny little problem with messing around with that, is when, and maybe you don't even want this, but when my system closes all of this stuff out, and you've essentially turned your copier off, it's not going to close yours out. So at the point where you're putting a hedge because you're trying to protect your account, you better be paying attention to it. There's been times when I stayed up the entire night watching my account, just protecting it. Could barely keep my eyes open. At 11 o'clock the next morning, the whole thing takes profit. It's all fine. So I stayed up for nothing. But you better be paying attention to it. So, that's it. I'll stop there. I could probably talk about hedging and protection all day long. But the moment, I mean, listen, I've told you the secret word. Go out and Google it. Go out and watch some YouTube videos. Beware, you're going to take on a lot of mind viruses. But somewhere in there is the information, and then I will do my best to get rid of any mind virus you have when I create my video that says, here's how we do it. And there's probably a million ways to do it. But the concept is the concept is the concept. And you can ride a bicycle forward. You can coast downhill. Some people can ride a bicycle backwards. Some people have bicycles that are tandem. Some people can ride someone on the handlebars, right? There's different ways to do it, but it's the same concept. You're on a bicycle. Same concept. You're doing a hedge. So that's it for Tuesday, August 13th. It's late. It's 1:16 p.m. for me. I've got some serious work to do. So I'll let you go. I'll be back Wednesday. I've really been trying to get up early, but I'll tell you what, the humidity in Michigan, which is where I'm at right now, kills you. And go look that up. Go look up what humidity does to your energy levels and sleep levels and everything else. It's insane. There you go. Health advice for the day. I'll see you guys in the next live episode.
Thank you for joining us on the Forex Trading Daily Live Show. Get access to all of the free trades with full auto trading at fxwithterry.com. Be sure to subscribe and get notified of the daily live stream. And get ready for your next profitable Forex trade.